Ever found yourself staring at the vast landscape of investing, feeling like there's a velvet rope keeping you out unless you've got a king's ransom to throw down? You see headlines about market gains, hear friends discussing their portfolios, and maybe even dream about building your own financial future. But then that little voice creeps in, I bet I need thousands, maybe even tens of thousands, just to get started. That feeling of being on the outside looking in is incredibly common. The world of finance can sometimes feel exclusive, filled with jargon and high barriers to entry. We're bombarded with images of Wall Street titans and complex trading strategies, which can make the whole idea of investing seem daunting, especially if you're just starting out or working with a limited budget. Think about it. You've got bills to pay, maybe student loans, the ever-increasing cost of living, the list goes on. Setting aside a significant chunk of money just to dip your toes into the investment waters might feel like an impossible feat. You might have even Googled things like best investments for beginners or how to start investing with little money and been met with a confusing array of options and minimums that still seem out of reach. And it's a valid concern. In the past, and even with some traditional brokerage firms today, those initial investment requirements could be substantial. We're talking hundreds, if not thousands, of dollars just to open an account and make your first trade. This naturally creates a significant hurdle for many aspiring investors, particularly younger individuals or those just beginning their financial journey. It can feel like you're stuck in a catch-22. You need money to make money, but you don't have a lot of money to begin with. But what if I told you that the landscape is changing? What if there are platforms out there that are actively trying to break down those barriers, making investing more accessible to everyone, regardless of their current financial standing? What if you could start building your investment portfolio without needing a massive initial outlay? That's precisely what we're going to dive into today. We're going to tackle a question that's likely on the minds of many aspiring investors. What is the minimum account balance required to get started with M1 Finance? Now, before we give you the straight answer, let's take a moment to understand why this question is so important and why platforms like M1 Finance are gaining traction. The rise of fintech companies has brought about a wave of innovation in the financial services industry. These companies are often focused on leveraging technology to simplify complex processes, reduce fees, and ultimately make financial tools more accessible to a wider audience. M1 Finance is a prime example of this trend. They've built a platform that aims to combine the power of automated investing with the flexibility of customizable portfolios. Their pie-based investing approach, where you allocate percentages to different investments like slices of a pie, is designed to be intuitive and user-friendly. This approach can be particularly appealing to beginners who might feel overwhelmed by the intricacies of individual stock picking or complex trading strategies. The beauty of this model lies in its simplicity. You decide on your investment goals and risk tolerance, and then you can either choose from M1's expert-built portfolios or create your own custom pie with the ETFs and stocks you want to invest in. M1 then automates the investment process, buying and selling assets to maintain your desired allocations as you deposit more funds. This hands-off approach can be a huge time saver and can also help to remove some of the emotional decision-making that can sometimes plague investors. Furthermore, M1 Finance often emphasizes low fees and accessibility. This is a crucial factor for anyone starting with a smaller amount of capital, as high fees can significantly eat into potential returns. The lower the barrier to entry, both in terms of minimum investment and ongoing costs, the easier it becomes for individuals to start building wealth over time. So, with all that context in mind, let's finally get to the core of the question. What is the minimum account balance required to start investing with M1 Finance? The answer, and this is where things get really interesting and encouraging for new investors, is that the minimum initial investment for a taxable brokerage account with M1 Finance is just $100. Yes, you read that right. Just $100. That's often less than the cost of a few weeks' worth of groceries or a weekend getaway. This significantly lowers the barrier to entry and makes it possible for a much wider range of individuals to start their investment journey. Now, it's important to note that this $100 minimum applies specifically to taxable brokerage accounts. M1 Finance also offers other account types, such as retirement accounts like IRAs, traditional, Roth, and SEP IRAs. For these retirement accounts, the minimum initial investment is slightly higher, typically $500. This difference in minimums likely reflects the regulatory requirements and administrative overhead associated with managing retirement accounts. However, even the $500 minimum for retirement accounts is still relatively low compared to some traditional financial institutions. Think about the implications of this $100 minimum. It means that you don't need to wait until you've amassed a huge sum of money to start investing. You can begin building your portfolio with a relatively small amount, allowing you to get comfortable with the process, learn how the market works, and start benefiting from the power of compounding over time. Compounding, often referred to as the eighth wonder of the world, is the process where the earnings from your investments also start earning returns. Over the long term, even small initial investments can grow significantly thanks to the magic of compounding. The sooner you start, the more time your money has to work for you. The low minimum at M1 Finance also allows for greater flexibility. You can start with that initial $100 and then gradually add more funds as you are able. This can be particularly helpful for individuals who are just starting their careers or are on a tight budget. You can begin small and scale up your investments over time as your financial situation improves. Furthermore, M1 Finance's fractional shares feature complements this low minimum perfectly. Fractional shares allow you to buy a portion of a share of a stock or ETF, even if you don't have enough money to buy a whole share. This means that your initial $100 can be fully invested according to your chosen allocations, even if some of the individual stocks or ETFs in your portfolio have a higher per share price. For example, let's say you want to invest in a popular ETF that trades at $300 per share. With a traditional brokerage that doesn't offer fractional shares, you wouldn't be able to include this ETF in your portfolio with just $100. However, with M1 Finance's fractional shares, your $100 could buy you roughly 1/3 of a share, ensuring that your money is put to work in line with your investment strategy. This combination of a low minimum investment and fractional shares is a powerful tool for democratizing investing and making it accessible to a wider range of people. It removes the financial barrier that might have prevented many from even getting started. With that said, thanks for watching, and until next time.